Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold surged into a new all-time high today after a strong round that started on Friday. There was no meaningful catalyst for the latest surge, which might indicate that it was just a technical squeeze. Nevertheless, real yields have been falling steadily since Powell's dovish tilt, so that provided a tailwind for higher gold prices. The focus is now on the US labor market data that will culminate with the NFP report on Friday. Strong data might take the probability for a September cut towards a 50-50 chance, but we'll certainly see a more hawkish repricing further down the curve and could weigh on gold. Soft data, on the other hand, will likely see traders increasing the dovish bets, giving gold another boost. In the bigger picture, gold should remain an uptrend as real yields will likely continue to fall amid Fed easing given their dovish reaction function. In the short term, though, hawkish repricing in interest rates expectations will likely keep on triggering corrections. Now, on the daily chart, we can see that gold eventually broke above this 4 month long range and rallied all the way up to a new all-time high. This is where we can expect the sellers to step in with a defined risk above the high to position for a drop back into the 3,245 support. The buyers, on the other hand, will look for a break higher to increase the bullish bets into new highs. On the 4 hour chart, we can see that we have this upward trend line defining the bullish momentum. If we get a pullback into the trend line, we can expect the buyers to lean on it with a defined risk below it to keep pushing into new highs. The sellers, on the other hand, will look for a break lower to increase the bearish bets into the 3,245 support next. On the 1 hour chart, we can see that we have this minor upward trend line acting as support. The buyers will likely keep on leaning on this trend line to keep pushing into new highs, while the sellers will look for a break lower to target the pullback into this next trend line. These red lines define the average daily range for today. For the upcoming catalysts, today we get the US and manufacturing PMI. Tomorrow we have the US job openings data. On Thursday we get the US ADP, the latest US jobless claims figures, and the US ISM services PMI. And on Friday we conclude the week with the US NFP report.